This is a unique format that we're doing today. We're very happy to do this. I think there's a trend now of democratization in the world of investing over the last decade. And we've seen this a lot with venture funds coming out with their strategies and really going out and talking to the founders and companies that they're investing in. And family offices is actually another bucket of investors that plays a very big role in this innovation ecosystem. And today we have a special opportunity to speak with some of them. So I'm very happy to start here. We can start with a round of intros, I think. So maybe I'll start off with our family offices in Asia. Maybe let's start off with the ladies. Miu, do you want to start and give a short intro, just maybe a short background on yourself and like a few lines about the family office?
Sure. Happy to do so. Thank you so much, Miguel, for the kind invitation. So I'm with Alpha Square Group. We're a single family office based in New York, but we are Asian background family, where the family, they were originally from mainland China and Taiwan region, mostly from the financial institution sector. So we've been here in New York for more than a decade, invest heavily into both growth venture as well as hedge fund investment. So, and also we opportunistically help the family to do some like private equity or real estate type of investment as well. But like key focus is still on venture as well as like hedge fund or public fund allocation. So I could like elaborate more like in the following section. But like my personal background, like I used to work for another large Chinese enterprise group called Gentry Enterprise Group. They are one of the largest asset manager based in China. And then like I used to work with them like in their Silicon Valley office, mostly helping them to do some venture type of investment. So like joined Alpha Square Group in late 2016, and then like right now mostly helping the family to develop and maintain key relationship with other family offices, and as well as sourcing some investment opportunity for both the private and public markets. So yeah.
Perfect. Thank you very much. Thank you very much, Miu. Maybe over to Singapore now. Mark, tell us a little bit about yourself in the family office. You're on mute, I think, Mark.
Okay, cool. So I'm with the Gentry Fund. Gentry Fund is a venture vehicle for a prominent Filipino business family, one of the leading conglomerates in the Philippines market. And our kind of mandate is very much to invest in early stage startups in the Philippines market for us to be able to allow them to work commercially with the Philippines conglomerate itself. So we invest typically pre-Series A to Series B companies, $1 to $3 million ticket sizes. Angle here of allowing them to commercially collaborate with SM Group or the Philippines business. And I guess when it comes to kind of collaboration, we look about it with two different lenses, right? So, there'll be the typical startup that will engage with the family business in the sense of a very arm's length basis. So, they'll depend on the startup for maybe 20–30% of the revenue. They will work on commercial vendor relationships with the startup, with the family conglomerate, in addition to also helping them connect in terms of channel partnerships to access the sort of user base that the conglomerate hosts. So that's our typical kind of startup that we like to invest in, right? So we are really maintaining the sort of independence of the startup while at the same time having that sort of upside through the commercial collaboration with the conglomerate. So that's our kind of sweet spot. As mentioned, $1 to $3 million ticket size. We also are a bit flexible in terms of being able to invest outside the Philippines as well. We want to invest outside the Philippines in startups that potentially could be quite interesting with being able to expand eventually into the Philippines market. We want to foster that sort of ability to access the Filipino market. And yeah, so it's us in a nutshell. It's actually very new venture vehicle. It's only been established 2 months ago, 2.5 months ago, actually. And yeah, that's us in a nutshell. For me, my personal background prior to this, which I launched the fund. Prior to this, I was in the Go Ventures team, which is the Gojek-backed VC vehicle. We did investments like Mobile Premier League. We did investments like Rival Foods, brought them into the Indonesian market. Prior to this as well, I was in the Gojek corporate development team. We did the Coins.ph acquisition, which is one of the largest startup exits in the Philippines market to date. And yeah, that's me in a short nutshell.
Mark. Luck, I will get to you last. I will save you for later. We'll get to the gentleman here on site first. Maybe let's start with Jonathan.
Sure. So I work actually for a UK-based family office. The family itself is basically very much cross-asset. What I'm doing here in Berlin is basically building out an impact investing stream and basically looking at various sectors that we think Berlin's quite good at. We found quite a lot here that we like, and spent the last year or so building out our presence and getting to know the network, and now we're basically ready to go. Before that, I worked for many years in the City of London for a large Swiss investment bank. So this time in prime brokerage. So now I'm kind of sitting on the other side of the fence, as it were.
Great. All right, Sebastian.
Yeah, hi, I'm Sebastian. I'm working for Millennium, which is a family office, first generation, based in Berlin, and we are invested in different assets, so from real estate in Berlin and the US, as well as venture capital in Berlin, and we even started 20 years ago something you would today call company builder. So it's really a broad experience we cover. And I'm a lawyer, but I work in digital and consulting business since 10 years.
All right, awesome. So we've covered the family offices on our panel today. I think it's very important to start off with them. But one thing we shouldn't forget is, the family wealth is coming, it's being generated at a corporate level. So we invited today Luck, calling us from Bangkok, to also provide some perspective from corporates in Thailand and in the region. Luck, could you please introduce yourself?
Sure. Hi everyone. This is Luck. So I'm actually a managing director of a company called Top Ventures, which is the venture capital arm of the company Thai Oil. We are doing a few things. So our main source of income is from the refinery and petrochemicals, but we're also doing like power generations, logistics, and also chemical and solvent trading. So a few things, right? Top Venture itself is just recently set up under the company's for like almost a year and a half, almost 2 years. And we are a new fund, but we invest into, and we look into 3 verticals. The first one is the industrial technology, hardware, software, anything that can be used in our own facilities, right? And also other industry as well. The second one is we are looking at the sustainability technology. So we are talking about biochemicals, circular economies, renewables. And the last one is it's quite a little bit like a tailor for us. We call it hydrocarbon disruptions, but anything that is going to hurt our bottom lines, like new mobilities, new energy, like battery applications. Those are the things that we are looking for. Under the VC, we do two things. We do 2 things with startups, right? The first one is a typical venture investment. But as where we are looking at the seeds and Series A startups, a typical check size would be a few $100,000 up to a few millions. On the other side, as a company, we are doing the venture partnership where we work with startup. It doesn't have to be under our portfolios. So we try to open ourselves up as a sandbox for our collaboration with startup, trying to give them any value that we can offer, and as well as looking for potential for us to partner and also to invest in the future. So that's pretty much it. My background is I'm a chemical engineer by training, but with an MBA background from the States. So yeah.
All right. Thank you very much, Luck. I just want to make sure that we're not missing anybody. We're supposed to have one more person, but Lito's not with us, right? I don't think so. Is he there? No, I don't see Lito. But anyway, maybe, we're now speaking at the occasion of the AsiaBerlin Summit. I want to start off with our local expert, I guess. I'm looking at you, Sebastian. You're the German family office here. A lot of these other family offices, like Jonathan, for example, has come here, looking at opportunities in Germany. Yeah. Miu, from New York, starting to look at Europe as well. Luck was here in September. We had some nice beers in a few breweries here. We can't do that, obviously, right now.
Of course we should, yeah. We should do it next time. Yeah.
The next time, we're all looking forward to it. But until then, Tell us about what you're looking at as a family office. Being the expert here in this market. Having looked at it, which asset classes are exciting you? Where are you spending your time?
Yeah, broad. That means we have asset classes is real estate, for example, and you already mentioned COVID issues. So on real estate, currently we don't see any movement, so nobody sells, nobody buys. Yeah, so it's like frozen market, but we don't see kind of bankruptcy, so that tenants aren't able to pay the rent. So that doesn't occur. So keep fingers crossed. And on venture capital side, we see that marketing is much more difficult than it was pre-COVID. Yeah, because I think it's a kind of monopoly in the e-commerce market that there's the spending for marketing goes down, but driven by the fact that you can easily reduce the work spendings in Germany by social law, and which will be also in 2021 the same. So it's the firms do very well. Yeah. So if you have reduced revenue, then you can reduce the expense for your workforce.
Right.
Yeah.
How do you think about venture capital as an asset class? I mean, as much as you can share with us. In terms of how you allocate there. In most family offices, and I managed one myself also in a previous lifetime, venture normally represents a very small portion of the portfolio because it's obviously the high risk part of it. You coming from a venture building background, like being an operator yourself, what's your view on venture capital?
So mentioning the company building part, it's a bigger one. Yeah, the traditional venture capital is also a small portion of the value, but you have to have in mind that it's easy to join or to be part of venture capital, but the question mark for us is also how to handle it. So it means how deep are you involved in managing, steering, and so on, or is it just spending some money there, and that's a strategy discussion we have every day, or at least every month, because does it make sense to spend small money in different companies without any real steering possibility? Yeah.
Understand. All right. Jonathan, we're very happy to hear a UK-based family starting to look at Germany and Central Europe. What's exciting you? What brought you here to Berlin? You said impact investing earlier. What are the opportunities?
So this is a new venture that the family's looking at. Principally, Berlin has quite a huge sort of scientific institution behind it amongst universities. So we quite like that. There's a lot of exciting new ideas and tech stuff that's coming out. Food in particular is something we've been looking at quite recently. So it's something that gets us quite excited about the whole Berlin as a city itself. Germany on a wider basis as well. Marketing is land of ideas. And we go along with that. I think as well as of everything, particularly in the COVID crisis right now, we see a big throwing of cash and sort of new ideas and everyone taking impact a lot more seriously. And this could also be the catalyst that gets, when we've got a whole generation previously that's always gone into their consulting businesses or investment banking or to law. Now maybe this is the tipping point when start your own startup, go somewhere, do something, make a difference.
Right.
And we like to think that that's what we're after.
Yeah, no, it's definitely a big topic. This theme has been, recurring throughout the entire summit. Impact investing, SDG. People see the need for it now, the importance of it.
Yeah, we speak to the wider scene here as well, and it seems pretty much everyone's seeing exactly this trend. Including from the big institutions now also want to get on board. But we still think, one thing that we really like about, or say where we see big opportunity in Berlin in particular, is that you got a huge amount of government help in the early stages. German investors, from our experience, tend to be a bit more on the conservative side. So there's this gap, this sweet spot where we think sort of around the early stages where we can get in and basically actually take some of these ideas forward. We're looking for mission driven, but also return too. And we think we really think we can get something out of that.
All right, perfect. Mark, I'm going to ask you a question now, but before that, I just want to tell Miu and Luck, I mean, the purpose of this today is really to create dialogue. So I don't want to be the only one asking questions. I'm going to get to you, the two of you after Mark. Please think of, I mean, you are both looking at entering Europe and starting to invest in Europe. What are the things you want to know about from Jonathan and Sebastian here? You know, like what are the things that you want to know as a family office and as a corporate VC? So I'll get to you. I'll jump to Mark first right now. Mark, I mean, you mentioned earlier in the introduction, this is a prominent family from the Philippines that have just recently launched this fund. 2 months you've been doing this. In the Philippines, you know, that's my home country. There's not a big venture capital scene yet, right? It's growing quite fast, and I'm very optimistic about it. But not a lot of families know about this asset class. What are you seeing there? You know, like coming from this family, the family office background, like why is there suddenly an interest to invest into this asset class?
Sure. Thanks for the question. Really good question, Anchor. Yeah, I think eventually you're starting to see family conglomerates and conglomerates in the Philippines really delve into the venture asset class. The main reasons is, you know, they are getting disrupted to some extent by some of the new technologies in the market. You know, things like Grab, things like Gojek have proliferated in the digital economy space, especially with COVID. Things are being digitalized to quite a large extent. So I think it's very much, do you get in or do you get left behind, right? And when it comes to startups that we could potentially work with, I guess there's really two angles to this, right? So there are a group of startups that you typically work with from an arm's length relationship basis. Those startups wouldn't actually affect the way your conglomerate's day-to-day businesses are run. In a more broader way, what they would be doing is working on commercial vendor relationships with your conglomerate, using your conglomerate as a channel partner to be able to access a new user base, which is quite important, you know, especially for an early stage startup, to reduce their customer acquisition costs, marketing spend. So there's one group of startups, and there's another group of startups that will actually disrupt the conglomerates, right? It will actually change the way day-to-day businesses are run. It will change the way operational processes are done. So there are two groups of them in that sense. And I think when startups, when conglomerates actually look at startups and actually classify them in that way, you are able to actually distinct whether you'll be using your balance sheet per se, or will you be using a family office vehicle to actually make the investments. I think that's where the decision tree actually splits up. Naturally, when you use your balance sheet, there's a bit more strategic underpinning to the deal, and it tends to be a bit more related to the core business. I think that's the way we are looking at it from a Gentry sort of perspective and from the conglomerate's perspective as well, is how do we actually underpin the fund returns by investing in things that could actually work commercially with SM rather than something that would disrupt the core. We would still look at guys that would disrupt the core, but typically that would be a bit more stringent. We'll be looking for things that actually has a strong sort of technological competitive advantage. And I think that's the main underpinning reason why people are actually moving into this space from a conglomerate level, right? Because you want to be able to, you know, foster this sort of ability to work with new startups, providing new solutions, or alternatively invest on the balance sheet level and, you know, bring something in that could change the way the business operations run. And I guess when it comes to sort of funding stages and how the funding timeline has developed in the Philippines, so I guess we are a little bit behind Indonesia and a little bit behind Thailand. So in Thailand, that's where you actually see the entire build up of the corporate VC space. You get very strong corporate VCs like TrueCorp. You get guys that like SCB as well has their own sort of venture vehicle as well. And in tendency in Thai space is that you get a lot of strategic sort of investments where it's actually balance sheet driven. And so that changes the kind of dynamics of the market as well. So in Indonesia is a little bit of a different story, where Indonesia, I think startups tend to remain independent. They get invested in by a few conglomerates at a time. So I think in the way the market actually plays out is actually quite interesting in the Southeast Asian economy. And there's no one answer in the sense that Thailand is developing their own way, Indonesia is developing their own way, and I bet Philippines is going to develop in their own way as well. I think the major key thing from a Gentry SM family conglomerate perspective is very much for us to be able to maintain the independence of our startups, because we view that if we were to take too strategic a touch too early on, it actually may impact the kind of trajectory and growth of the startups that we invest in.
All right. I mean, I love what you mentioned, and I think that's important to point out to the audience. You know, like from family offices actually have multiple pockets to invest from ultimately, right? I mean, if your first touch point is the family, it doesn't mean that they cannot pass you to the corporate, which would be investing from the balance sheet. Doesn't also mean that the family members may decide to come in as angel investors themselves as individuals, which I've also seen in the past. But I want to touch on another point you mentioned about like Thailand, you know, being really ahead of the game here. They have a huge corporate venture ecosystem there already. It's on the third wave. You know, it's not just telcos, not just banks, but real estate firms, oil firms have their own CVCs as well. Luck, I mean, you've invested in the US, starting to look at Europe. I mean, what do you want to know? What do you want to know from our European family offices?
Yes, thank you. Yeah, that would be really helpful. So one thing that I always think about when entering to the new market, right, is to figure out the best way to actually present in the ecosystem. So one thing that I noticed about Europe is most of the time we will look at Europe as a single market, right? And maybe like a market itself is not, it's really well established, and maybe the startup can go out and take the piece in every countries in the ecosystem, right? But from the perspective of the business and operations, I wonder if that's also the same case where the business and operations are like treated as a single, I don't know, like operation base and everything like that as well, or is it still like more diverse? Where should we figure out the best way to get into the maybe like the parts that is more I'm not sure, but it's the best entry steps to get into Europe. That would be like the overarching questions that I have here.
Do any of you want to pick that up?
I mean, I could start with that because I've kind of basically done this from, that's what I've been doing pretty much for the last year.
Yeah.
Basically, it's just a question of going around, meeting people, having lots of coffees. I mean, it's been a bit difficult in the last 6 months, let's be honest, but it's just a question of going around. Half the time you'll be wasting your time completely, but you'll find some gems of people that will link you into pretty much the whole system. But you just have to keep at it.
Right.
As Sebastian knows too, I mean, you know, we've met previously, and again, it was a coffee from a mutual introduction. Go along to accelerators, they all hold events, go along to these things and just put your name out there. But I mean, I think you have to also be realistic as well, have some idea about what you're looking for, because I mean, you know, I found at the beginning when I sort of like, I'm looking from an impact investing side, you kind of get all sorts of rubbish thrown at you. So, you know, you need to precise a little bit. Sebastian helped me with this too, actually. As you know, you need to precise a little bit. Look, what is it I'm after?
Right.
Okay, who are the stakeholders here? Who's the government side? And actually, that's one point. The governmental institutions, the banks, EBB, KfW, I mean, they are all extremely helpful. Mm-hmm. But you have to ask for help, and I think that's the thing. Just don't be scared to ask, and just get out there.
Perfect.
It's as simple as that. And I know that right now that's tricky, but you know, it's still doable.
Anything to add?
Yeah, that's as you mentioned. You have to establish your own network. You have to find kind of focus and the story also. You tell about yourself so that people get kind of connected with you as a person, so that they have you in mind. And you should, you may find some leading investors you may join as co-investors. For example, we often do co-investments with family and friends, and so it's easier for you to do due diligence, to learn the market, to learn how to assess, especially in the European environment, potential targets.
All right.
Yeah, I think also I would add to that as well, some local funds too.
Yep.
They can be a great source of network, also deal flow as well, and also getting to know exactly how things work, the nitty gritty.
Yeah.
And also other things too, like getting good lawyers and structures and this type of thing. I mean, you know, there's.
Yep. I think, I mean, what you mentioned about the funds, I mean, this is really a great source of like insight into an ecosystem, and a lot of families have that strategy, right? The fund-to-fund strategy, where you put money into a fund and at the same time, you know, find ways to directly co-invest with them. And I guess that's a good time to bring you in, Miu. I mean, I know you've invested in scale-ups in the US. You've invested in a lot of funds, starting to look at Europe now. Is there anything in particular you want to know from these two gentlemen over here?
Hello? Can everyone hear me?
Yeah,
we
we're
disconnected.
here.
I think I kind of lost the moderator.
No, we hear you.
Yeah, Miu, I think,
Oh,
yeah, I
okay.
think all three of us did.
So I'm fine, but like, hey Miguel, can you hear me?
Yes, we hear you.
Yes.
Yeah, but do you mind repeating the question again? Because I
Sure,
believe
sure. No, I was just saying that we were talking about fund-of-funds vehicles here now, and I know that you've invested in scale-ups in the US, but also in funds, and you've been looking at a lot of different strategies coming into Europe. Is there anything that you want to know from these two gentlemen here? You know, like what, like.
Yes, I do have a couple questions. Like just like Miguel mentioned, we are allocating both in funds and direct. And of course, as a single family office, we prefer to go direct. And like the reason why we allocate across different managers is first because of course like to some sectors we don't have their the industry expertise, just like biotech or like pharmaceutical, those type of industry. That's why we set it early stage managers, also that we could learn from the GPs. But in most cases, like the reason why we invested in investing in like fund is because we want to generate some deal flow. So that's why like we sit a lot of like either early stage fintech GP or like early stage enterprise software managers, which are like two key sector focused here at Alpha Square team. And also like my question for you will be like because as mentioned to Miguel before, we always want to get into the European markets, and then but we have not yet find a good way to get into the market. Like that's why we are looking at we are talking to some like managers in either German or other European country, so that to like either first get some sense about the overall market, and the second thing to get some co-investment. But at the same time, I'm just wondering, like from the family office perspective, do you think like investing into a fund manager is a better way to get into the region, or do you prefer to work together with some very close network or family office network to co-invest alongside with a deal to get into the market? Just would love to learn from your perspective.
So I guess she's asking, I mean, is it like a fund strategy first or just like a syndicate of family offices? I mean, I don't know if you have an opinion on that.
Yeah, I think it depends. If you want to just have some investments in this region, then a fund would be sufficient. But if you really want to know the region, then a fund wouldn't help you so much because they don't explain it so much. So in this case, you should do the same maybe as Jonathan did. So you should have somebody here in this region who is able to establish a network and so on, and find other family offices, other fund investors, so that you have your own network, you know the people and so on. Mm-hmm. Yeah, because just investing in the fund, they won't explain a lot for you.
I mean, I would add to that. I think going into a fund is definitely one way in, but I don't think it's hard to be having a presence and building your own network. And like I say, there's a bit of dog work involved, but you get the right people. I think co-investing straight out, I mean, that's something as well. If that's something you're comfortable doing, then fine. But I mean, going in with a fund is probably a good way. And also, I mean, let's think about how you structure it too. Because I mean, if you go into a fund with the basis of saying, look, we'll put this ticket size in on the basis that you help us with deal flow and you help us set out. Generally speaking, people will be open to that. Mm-hmm. But again, that's a conversation we had at the beginning. I would say. I mean. Clearly, this is something. I mean,
they would need somebody like you, Jonathan, that's willing to go out and meet as many people as possible. Then, and that's not hard. It's a little bit hard to find. Would you say?
It's fun.
It's exactly.
It's good fun, but there's a lot of times when you do find like I'm wasting my time here. But, but I think to be honest, I think that's the way forward. I think actually, if you could go into a fund, and I think that's probably quite a time-efficient way of doing things. Mm-hmm. Again, assuming what sectors that you want to go in. I mean, if you're looking for something that's on the, I mean, you'll find all here actually, to be honest. But but I think that's an important thing to have in mind beforehand.
Yeah, fair. All right, I want to flip the tables a little bit now. We've been asking the European side questions. I know that your coverage is mostly Europe, but I mean, we have a lot of experts here I mean, maybe they can just tell you a little bit also about the Asian markets and what's worth looking into there. I'll ask the first question, and then I mean you can think about what you want to know. I'll ask it first to Miu. She's there, yeah. Miu, I mean, China. We have to talk about, right? Like, I mean, the family comes from there. It's the biggest market. Like, what should we be looking into? Tell us a little bit about what's exciting.
Thank you so much, Miguel. Like, I think right now, like, because our family office, of course, we allocate not only in the US but also in China, and like this day, like especially post COVID, like we pay extra or additional attention to those cloud computing and e-commerce company. Like I think it's not only in China but also like around the globe. We are paying a lot of attention to those cloud computing, e-commerce or biotech company, both on the private and public sector. So because like we feel like post-COVID, like there are more and more enterprise or like people, they do have the demand to go digitalization. And then I feel like cloud computing, which was their like theme for our investment, are still like keeping to grow a lot. And also in terms of the Chinese market, very interesting. We feel like this day we just invested in Cotu's EV fund, which is a thematic fund. So the reason why is because like electronic vehicle, it's a sector or it's a vertical that we are very bullish about. And then like after knowing about the Cotu's, and also like I believe everyone knows the big three EV company in China, like XPeng, NIO, and also like Li Auto. So we invested in NIO and Li Auto at their IPO and then got a very, very good return. That's why we're very bullish about the overall trend of the Chinese EV and the global EV company, like looking at Tesla, right? It's great. It's been growing very fast. So that is something that we are paying attention. And at the same time, like healthcare has been growing very well in China. So like healthcare, either healthcare service or biotech company are key focus for us in the Chinese market at this point of time. So we co-invested alongside with our fund manager or like work together with our local connection to get access to those deal flow. But since I'm not a healthcare expertise, so I cannot share a lot on that front, but like healthcare service and also like EV are like a two very thematic trend that we see in China right now. Yeah.
So electric vehicles, big theme. Maybe the oil company wants to share some insights here. Luck, I mean, you mentioned the three pillars that you invest in. I mean, is EV also on your radar? And if not, tell us, like what's exciting in the Southeast Asian region?
Sure. Thank you, Miguel. So EV is definitely one of the key trends that we are having our eyes on, right? So as an oil company, we are looking at some things that is going to last into the future, and also having the potential impact to our to our business as well. So EV is definitely under our radar. The ecosystem right now is still to be built. I mean, Southeast Asia, especially in Thailand, I believe that's it's the matter of the when, but not if there's going to be here or not. So I think that is quite clear. A few things about Thailand that I think we are prepping ourselves to the EV would be on the policy level, and also having the corporates like the major auto, because Thailand is one of the auto hub, right? So it's actually a potential for us to really get into that. The key question that we are still trying to figure out is when it's going to move, and the other key questions that we are still thinking is whether it's going to have who will be the players in the market, whether it's going to be like maybe Chinese companies trying to get into the market here, or is it going to be some local brands, or even like a major brand who's going to flip their production lines here from the conventional ICE into something more like an electrical vehicle drive. So that's a few ambiguity that we are still working through that. But as I said, I think one thing that we want to be here is to make sure that as a Thai corporate, right, we want to provide, we want to lend our hands into like facilitating the companies that going to help us coming here and try to grow the trends of the EV here as well. Apart from EV, one of the companies that we are looking into and are also considering more is trying to look beyond just the drivetrain. Right? We are looking at the autonomous vehicle. That's quite obvious, but there's a few aspects to that, right? From the sensor to integrators and to all the data processing and everything. So even like the control. So there's a few elements in order to execute that autonomous vehicle, and I think that's quite an interesting idea for us to look into, because frankly we have to look at the companies as the how much resources that we have, right? Are we going to get involved into the EV productions, or are we going to look into something that is more suitable for the supply chain, where we can get in and deliver some of our value here? So yeah, the one thing that gets us excited is about the autonomous vehicle, and also anything that related to that.
All right, so mobility, big topic. Gentlemen, any questions for our Asian families?
Maybe the question you've mentioned before, reverse, means if we wanted to enter the Asian market, of course Asia is much bigger than Berlin, we know, and what would be an approach for us? So should we start invest in a fund, or should we establish some person in this region? Maybe it's different to answer for each Asian state, but at a glance, is there any idea from your side, or any advice you may help us with?
Mark, do you want to start? I mean, I know you have private equity, venture capital, and now family office experience, so maybe you want to start off.
Actually, to be honest, I think it's worthwhile just doing direct investments. I think while funds here, they do give you access to certain amount of deal flow. I mean, Southeast Asia isn't really that big. If you have a guy on the ground, doing deal sourcing, all roads kind of converge at some point. So you do kind of get the deal flow from that everyone kind of sees the kind of same kind of deal flow. It's quite a large base, especially if you go into like Indonesian market. Generally, funds kind of see the same deal flow, right? So if you have a guy on the ground, you're going to get access to the same deal flow. And then what's the point of paying an additional 2% management fee, right? So I think that's my kind of perspective in that, you could save quite a bit of money actually just doing it direct. It's just a factor of what stage the kind of startup industry is at, right? So you're not going to get the same kind of depth in B2B SaaS, for instance, in the Southeast Asian region. It's probably worthwhile, just putting a guy here, someone with experience, previous experience in the venture capital industry, and then you're probably going to get the same sort of deal funnel.
Perfect. Thank you. Miu, anything you want to add to that? Like strategies, market entry strategies?
Oh, by the way, so when I mention all of that, that is specific to Southeast Asia, not so much China. So I'm only experienced in Southeast Asia.
All right.
Yeah,
that's why we need your perspective now, Miu.
Yeah, I do have some tips getting into Chinese market. I would say, like, even though a lot of people, they started to invest into China through fund manager, but like from our perspective, or from my personal advice, it would be great if you could first try to find a trusted partner before you invest into fund, because like there are a lot of fund manager in China right now, and then like it's very difficult to say which one is better or which one is good, unless you got a very trusted either family office or local connection. So like just talk to them and then ask for their experience or like introduction for those real legit fund manager in China, and then like you make a decision either on the direct or on their fund investment. And also like a small piece of tips, like invest directly in China. Even though our family has very strong network in China, but we try not to do any like SPV type of investment with unless the partner is very trusted. Because the structure is very complicated in China. So like if a foreign investor invest directly into the company through the SPV type of structure, the liquidation problem will be really problematic. Trust me.
Mm-hmm.
So like just
Right.
try not to go through SPV, even though it seems like the deal is very good, but like the access, it's a real big problem from our peers' experience. That's why right now, like we only do directly into the company, like who we've known for long, or we go with very trusted like fund manager to get into the region. But before both of that, like just try to find a trusted family office or partner in China before you get into the region, because he has, I believe he or she has better understanding with the local like government relationship, which is critically important in China. So yeah, that is my personal
Thank you.
like advice.
Thank you, Miu. We're there's a part 2 of this session, but I think I want to give one last question for Jonathan. What you're curious about?
Yeah, I mean, how do you see impact investing themes in Southeast Asia? So, I mean, it's becoming a very big thing here. I haven't read much about what's going on in Asia, but are you seeing a huge sort of exponential growth that we're seeing here too?
Who wants to take this?
I'm happy to. Yes, so you are seeing a growth of impact funds quite evidently because the region is skewed a little bit towards the base of the pyramid. So, Class B, Class C consumers in terms of Nielsen rating. So, I think ideas and startups that could marry the both a bit, right? So, kind of covering the UN development goals while at the same time generating some sort of sustainable profit in terms of path to profitability. I think everyone's looking at them just mainly because, there's quite a significant amount of growth that our region has to undergo, and not just at the Class A level. Class A consumers are pretty much in the same level that you would have in the West. If you're from the Class A kind of society, you're living in a very developed sort of manner, right? But obviously that same sort of access to bank accounts, access to insurance, access to financial services, access to consumer options, you don't have that at the Class B, Class C level. So yeah, I think impact funds are playing quite a big role, and I'm really bullish about them because they marry both, right? Obviously, the kind of hurdle rate that they will be going for is a little bit different, but I think that sort of mandate is bought in by the LPs that subscribe to those sort of funds.
All right. Okay, thank you very much. So I think right now we'll take a little bit of a pause, a little transition. Thank you very much, Sebastian, Jonathan. Thank you for joining us and all the insights.